Right, I think we're live. Hello, if you're watching this back, just gonna double check that. Just gonna double check you can hear me. This is the first time I've done a live stream, so just gonna go over some technical checks to make sure that everything's working the way it should be. I'm gonna open the link on my phone, and I'm gonna see if I can hear myself. Haha, okay, we're working. Let's do it. Right, I'm gonna put on some tunes while I do this in the background. We're a bit loud. Right, okay. Welcome to the first Scott Chats live stream. It's Sunday. We have rattled through a list of about 400 stocks and produced this watch list with 57 stocks. So not all of them are going to be trade setups, and some of them are going to be guff. But it was just the ones that on kind of first glance looked like they had some sort of potential. So we'll go through them and we'll see what we can see. We'll see if there's any potential trades, any potential longer term holds. The first one we've got is AmerisourceBergen Corporation, or ticker ABC for short. On the daily time frame, we've got a bit of a bull flag going on here with hidden bullish divergence getting ready to confirm. And if we go down onto the 4-hour time frame, we can see that we've actually got triple bullish divergence here on the 4-hour. So I'll put that in, keep that for hours. Okay, so ideally we're looking for a breakout of this downsloping supply line, but this is a good potential for a trade. And if we actually look at the no. Okay, so that's the first one. Airbnb, just wanted to kind of touch on this. I'd spoken about this in a video a couple of weeks ago, just that we had this sort of kind of support zone that was broken, but we had a falling wedge, broken out of this falling wedge, and we're up 30% so far in Airbnb. I think my final target, if I was holding Airbnb, would be this level right here. You see it acted as support 3 times. We got the break, and then it was resistance up here. So I think we at least come back up and retest this level. Moving on, ABR. So we're currently breaking out of this downsloping supply line from January last year. We're above the. In fact, sorry, I've got the wrong moving average on. 150 day. There we go. So we are now above the 150 day moving average and above this downsloping supply line. Apart from that, there's not really any technical indicators that would make me want to enter this, but it was worth noting. Adobe's filled the gap. We had this gap down from the 366 to 329 level. We've come up, filled the gap. We're also above the 150 day moving average, but worth noting that we're above the 150 day moving average here, but it was a bit of a fake out, came back down, and that's when we gap down. So whether or not we see this kind of same price action repeat here, I think it all depends on where we see the overall market. If I just go into my watch list quickly, I have to take this off, have a quick look at the S&P. Obviously, all over social media, everyone's been talking about this downsloping supply line. For me, you know, we came above the 150 day moving average here, and now we're back above. So we're above the 150 day moving average, we're above this downsloping supply line. But for me, sorry, I'll just take these boxes off. For me, we've got this level here that I think this is now the important level. Rejected here. I think if we see a break of this level, and then a retest, and we hold this level, then I'd be more than open to thinking that we go up longer term. But if we actually reject this level and we come back down, then I think that's when we see these lows getting swept. And you know, I've been very vocal about this level here from the sort of post pre-COVID high. We've not had this level getting swept yet, so for me to have any sort of sustained rally to the upside in terms of overall market shift from bear to bull, I think that this level needs to be tagged. But what do I know? We just need to play the market as it comes, and this level is the next sort of line in the sand. This is where the battle between the bears and the bulls is going to be seen. So we'll keep an eye on it. We'll go back to where we were at. So where were we? We just had Adobe, and now we're back. We're on to AFRM. So this one looks pretty similar to Airbnb in the fact that we had this support level. Price sort of bounced around. We had a kind of break underneath, and we've reclaimed. We've got the 150 moving average coming down, so we could be seeing like the start of a stage 1 base. So one to keep an eye on. AMD, I'm not really sure why I had this in, to be honest. It's been pretty strong since we took so if you go back on my Twitter, we actually took this trade here. It was a very good run up to the 0.5 fib retracement, about a 40% run up. And it was right off this massive volume shelf. If I just turn on the volume profile and zoom in, you see we had this volume shelf here that came down and bounced off of. We came up and we found resistance at this volume shelf, but we look like we're going for a second try at it, so it's worth keeping an eye on AMD. We're also testing 150 moving average. So there's quite a few things in confluence here to show that price is facing strong resistance. You know, this level here with support here, resistance here. So we'll keep an eye, see what happens. AMH, break above this downsloping supply line. Currently testing the 150 moving average. Apart from that, there's not really many technical indicators that's making me think this would be a good position to enter. APA, so I tweeted this one this week actually. If we have a quick look, I'll zoom out to the weekly so we can get a better look. From, let's see, June 2018 to June of 2020, we had this rounding formation, and then we had this other rounding formation, which is what we call a cup and handle pattern. If we zoom down into the daily time frame, the cup and handle, the handle of the cup and handle is in itself a cup and handle. You see that we've got the cup round. Oh, we've got the cup rounding, and then we've got the handle, which is like a bull flag as well. So there's lots of different technical indicators and patterns here, as well as we had confirmed bullish divergence. So for me, I think we do see this bull flag breaking to the upside. I'd be targeting this 1.618 fib retracement, and if we were to take a long position from here, my stop would be the low of the flag, and obviously the target would be the 1.618, which would give us a nice, just about a 3 reward to risk ratio trade, which is ideally what I'd like to target for most of my trades. Moving on, AMC. I've seen this has been getting a few more mentions on Twitter recently. So if we look at the daily, turn on the, so there's actually not enough days in the chart to to see the 150 day moving average, which is interesting. I don't think that's the right ticker, is it? AMC. Yeah, this doesn't seem like the right ticker. This seems like a different stock altogether. Hold on, let me just clear it up a little bit. So yeah, this one doesn't look as good as the other one. So we've got this level, we can actually pull this level out. It's still a valid level. Price rejected off. Nah, so for me, I don't see much in this chart that looks great. I mean, we might see a random pump, but it's not the sort of plays that I like to get involved in. I like to have a pattern with divergence primarily. So that one can get booted. APPS. It's another one that's not great. Azul. I spoke about Azul on Twitter as well. It's the weekly chart. This one's sort of got my attention. We zoom right out. We had the big sell-off with hard support put in at the $6 level. If we draw that level across, we can see that we found support here, and price is currently consolidating. I don't know why I said that funny. Consolidating on this level. We've also got the falling wedge, and we've got triple weekly divergence, which has been confirmed. So, thinking long term, I think this is a great swing position. And if it's not a great swing trade position, it's definitely a great position for putting into a kind of long term portfolio. I'm not big on fundamentals, but let's just have a quick look and see. So a PE ratio of 5.7, positive EPS. This is a good number. I believe this is a good ratio for PE. So, Azul, this is one that I'm probably going to be entering. I think, where's our levels? Let's see if we take the fixed range volume profile from the high to the low. So this is where the point of control, you like to see the point of control being at the bottom. It shows that this is where the base is getting built. There's a lot of volume here. I don't imagine this is selling volume. I imagine it's buying volume. So my next protocol to find my levels would be taking the fib retracement from the high to the low. You see we've got our 0.5, which lines up with this resistance level. So I reckon you could take a long trade from here. Your stop loss is going to be tight below the lows and targeting the 0.5. So it's, you know, a 5-to-1 reward to risk trade, which is pretty good. And I think as well it'll be a good thing to hold in a long-term portfolio going forward. Moving on, in fact I'm going to take a quick note of that. AZUL on my notepad. Cool. Moving on. So quite a few to get through, guys. It's CFLT. So this one here, we're still in the weekly. We'll go back to the daily chart. We see we're forming a stage 1 base. We had stage 4 decline, big sell off. Again, support here. Draw the level across. We had price use this level of support again. We're seeing big volume here. Earnings are due on Monday the 30th, so we could see some volatility with earnings. I think we've got a bit of a downsloping. Yeah, so you can almost say that we've got a downsloping supply line that we've broken out of. So this could be one to watch. I think if we flip the 150 as well and we make that into support, this could be a good position to hold longer term. Coinbase, another one that I've mentioned on my Twitter. I'm thinking that this is starting to look like a bit of a wick off accumulation scheme. If I don't know, I'll get the schematic picture for comparison. So if I just copy that and paste it in here, you'll be able to see it more clearly. So you get a preliminary support, your automatic reaction, sell and climax, strength test, and then this could be another ST or a potential spring. I think we could see price moving about in this range for quite a while, because it's a stage 1 base forming after a stage 4 decline, and it was a pretty massive stage 4 decline. So I think a bit of time to give the sort of institutions time to accumulate, which means good potential for loading up long-term bags. Also have a falling wedge which is playing out. We had bullish divergence confirmed, and then high volume came in on the breakout. So one to watch going forward. CX, this is just what I wanted to mention quickly. When we're talking about, I keep mentioning stage 1 bases, stage 4 declines. So it's what we call stage analysis. You've got your 4 stages. So stage 1 base is like the kind of accumulation phase. Stage 2 is when you get your breakout and continuation. Your stage 3 is when you're getting this kind of toppy price action at the end of a sort of run, and then your stage 4 decline is when you're below the 150-day moving average and you're in a kind of bear market downtrend. So a lot of stocks at the moment, and I mean a lot, I'm just taking off my jumper, are developing this sort of stage 1 base after their declines. So there's a lot of good opportunity here to be sort of loading up for longer term portfolios and whatnot. As you see, we respected the upper range of this channel 3 times, support 3 times, found support on the 150-day moving average in the midline of this channel, and then we broke out on high volume. So really for me, CEMEX, if I was looking to get in on this, I'd maybe be wanting price to come back down and retest the top of the channel. And while that's happening, you want the 150 moving average to be curling up, so you're getting the kind of confluence of the top of the channel and also the moving average. That'd be a great place to enter for continued upside. DNN, Denison Mine, this one was added to my long-term portfolio through the week. A bit of exposure to uranium miners. We had the breakout of the downsloping supply line, and then we retested it. So we bought on the retest, and we've seen a bounce from there. 150 moving average, we're above it. It's curling up. So same story. We're looking for this 150-day moving average to kind of follow with the price action, and I'll be adding to this as it continues. EC, so like CX I was talking about, we have a range developing, a stage 1 base developing after the kind of big sell-off. Price broke above and it's now retesting the top of this range. So we just need to watch and see whether or not we break through it, or if we continue holding the top of this range. EL, Estee Lauder. This one, potential for a swing trade to the downside. If you see, we've got this kind of downsloping supply line here. Rejected off it, and it looks like we're rejecting off it as well. We've also got a rising wedge with triple bearish divergence on the daily, which was confirmed on Friday last week. So I think this one looks to be tracking the sort of wider market. So depending on what the S&P does, I think EL will follow. But certainly the technicals are there for a shorting opportunity. For me, I'd be taking the fib retracement, and I'd be saying, right, okay, where's our levels? 0.5 again seems like a pretty solid place to be targeting. I'd be taking my short. I'd be cutting my losses above the most recent high, and I'd be targeting the 0.5, which is a 3.8 reward to risk trade. So another decent trade. Moving on. EXPI, just another one to mention, forming this sort of range at the bottom of a stage 4 decline. Big volume. So as we move up towards the breakout level, we're starting to see big volume coming in. Ford Motor. We've got this kind of big downsloping supply line from February of last year. Price is now at the supply line and at the 150-day moving average. So really, if we break this and we retest, this would be a great entry zone. It's also massive company, profitable, pays a dividend, so be a good one for a longer term hold as well. Yeah, Freshworks, another example of sort of stage 1 basing, getting this kind of rounding bottom sort of formation. If we take a curve, we can see getting the rounding bottom and we're breaking above the 150 day. You've probably got this kind of horizontal level at the moment which is acting like your resistance zone. So really you're wanting to see price breaking above, retesting, and then continuing whilst the 150-day moving average curls up. FSLY, so still on the pen tool. So again, similar to the last ones, but this one's pretty clean, to be honest. You don't have divergence at the moment, but you do have this channel, which is being respected quite well. Price is above the 150 moving average, but it's currently testing the upper breakout level of the range. So again, want to keep an eye on. Fisker messing about. We saw a kind of volatile price movement on Friday, big volume, big wick, but again couldn't quite break above the 150 moving average. So until we see that broken, I think we can't be getting too confident that we're back in bull territory with this one. Gold feels limited. We see broke above the 150 moving average. It's curling up, so I'm looking for a price to come back down, test this level, and the 150 moving average to be here in confluence. We've got the bearish divergence confirmed on the daily, adding confluence to the fact that I think this is going to see further downside to this level here at least. GIS, General Mills. So we had this support sort of demand line from July of last year. Price broke below. It looks like a bearish retest, as well as the fact it's now below the 150-day moving average. We do need to watch out for what could potentially be developing hidden divergence. So until we sweep this low here, no idea why I used the highlighter tool. Use a rectangle, yeah. So until we sweep this level, this is still valid. But if price breaks down below here, this hidden divergence is sort of invalid rather, and we could then be looking to take a short position target here. So like a four risk to reward, could be a quite a nice trade. So we'll keep an eye on that one. General Motors forming a bit of a pennant, could be like a bit of a stage 1 base after we've had a decline, and this is quite a clean chart to see. We break above the 150-day moving average, and we then continue to see massive upside. 135% gain. We break below the 150 and 46%. So this could be a nice base it's forming. Barrick Gold. I have Barrick Gold in a downwards descending channel at the moment. It's been respected quite well. It's currently above the midline of the channel and the 150 moving average, but I think that gold is set for a leg down before continued upside. So this would be worth watching for maybe scooping up some shares at the midline or the 150 moving average when it's curling up. Grab holdings. So this one was a really nice trade that I had on. So just quickly, it's an emerging market stock. So the emerging market stock seem to have had their sell-offs well before the American markets, and now they're sort of accelerated in the fact that they're ahead of the curve with their stage 1 bases. So we had this nice range. I'll turn off the moving average at the moment so you can see quite clean. We had this falling wedge pattern with confirmed divergence. We entered here and we had our stop loss below this wick. We targeted the midline of the range, gave us a 2.2 reward to risk trade, and we also targeted the top level of the range, which gave us a 4.5 reward to risk ratio. Both target take profits were hit. Now I've got my eye on this for longer term. If we turn the moving average back on, we're now above the 150 moving average. If we came back down and tested the midline of the range again, where the moving average is going to be, I think that'd be a great place to enter for long term. HLX, we've got a bearish Gartley harmonic with a rising wedge sort of chart pattern. We've also got bearish divergence, which is confirmed, so keep an eye on this one for a short. HMY, this is one of my personal favourite gold mining stocks, based in South Africa. Played it off this wedge, and I've not touched it since. We had a very vicious sell-off from 550 down to 190, 65% sell-off. Good run up since, back above the 150 moving average, but we've got this level here was resistance, and broke above, and now it looks like we're breaking back through rather than acting as support. So keeping an eye on this one. We might see it bounce, might see it turn around, might see it come back down and retest on 50 moving average, but take it as it comes and play what the chart gives us. IP, International Paper Company. So again, this one has bearish divergence confirmed. It is currently at 150 moving average, so watching this for another leg down. Kingscroft Cloud Holdings, KC is the ticker. Another one, kind of stage 1 base. Depending where you take the top of this channel, you see it's still inside, but price is above the 150 moving average, so again, one to watch developing for longer term. Lufax Holdings, so this is one of the biggest positions in my long-term portfolio at the moment. If we could go out onto the weekly, we can see that price is in this massive massive falling wedge. We had confirmed bullish divergence, and we've finally got the breakout from the downsloping supply line. If we go into the daily, we can get a kind of better look. Price is currently broken above the 150-day moving average, the first time it did so since May of last year. From the lows, we are currently up 155%. we had this kind of horizontal level here that we broke out of and we retested, and now looking up, we don't really have any significant levels until about 388. So this has still got plenty of room to run. Mondelez, downsloping supply line, broke above, retesting with the 150 moving average coming up to act as support as well. Cloudflare, this one had a downsloping supply line, broken above, testing 150-day moving average, so one to watch. I'd say this is your level here, your 76 to about 81. It acted as support here, we broke through, and then resistance right here, so this would be where I'd be targeting for this one. Neo, if I zoom out onto the weekly, it's almost like a massive downsloping, a massive falling wedge. You have your downsloping supply line, demand line here, confirmed divergence, and price tried to break out last week. If we go down onto the daily, you can see that we're getting a higher low here. This is a higher high, so it looks like we're trying to break the bearish market structure. Looking to see until we get a break and stay above this downsloping supply line. I'm not going to be in any positions in this one. Nikola, obviously one of the scam companies that came from the easy money period during the pandemic, but it is forming a falling wedge, and on the weekly, sorry, there's no divergence in the weekly, but I do think it is an interesting looking chart, and there's potential for a position in this one going forward. Yeah, so that's actually it for this stream. In fact, there's one more I want to talk about, AVCT. So AVCT is a company which is apparently in the process of developing chemotherapy that doesn't harm the sort of cells around the tumour. It can target the tumour directly. So the technicals look pretty good, I'd say. On the weekly chart, zooming out, you've got this level which was resistance here, and then resistance here, and we broke above. We had resistance here, support. So these are your two major levels. And you can see here, this is a range, and we've broken out the range, and we're actually retesting. So if I go into the daily time frame, you can see that prices respect this range, and we've broken above and filled the gap, but we've also found what looks to be support. So worth keeping an eye on the next couple of days, seeing how it develops, but I think this one could be good for a longer term position as well. And that's just about it for this week. I think it's definitely a work in progress, but this is the first stream on this channel. I think it's a better way to do it going forward, because there's quite a lot of charts which come up each week, and I like to pick the kind of best 5 or 6 and tweet about them. But it's good to talk through quite a lot of them and discuss the technicals that are there, and hopefully if people start watching this, they'll be able to take some value from it. So hope you've all enjoyed. Going forward, if you'd like to see certain charts reviewed, then leave a comment or tweet me at Scott Charts, same name as my YouTube channel. You can get me there. I'm more active on Twitter than I am on YouTube, so if you'd like me to cover anything, then get at me.